market trends, two of our senior market analysts, Walt Hackney and Doug Jackson. Gentlemen, welcome back.
Thank you, Mark.
Well, Doug, let's talk about the soybean market where the most dramatic price movement has been, and this week was certainly no exception to the downside. Could the high be in on the soybean market?
Mark, we got some unexpected rains across the belt this week. We saw rains in Wisconsin, Michigan, parts of Indiana, some scattered relief in Illinois, a lot of rain in Iowa. And that was a bit of a surprise to the market from what we had imagined early in the week. The market understands, of course, that the bean situation will be determined in the key month of August, where rains will either make or break this crop. As we go home over the weekend, we've got forecasts for several heavy rain events next week, which in the mind of some suggests a major pattern change, which is not unprecedented. Everybody knows beans can dramatically improve if we get the rains in August, and how much we can improve is yet to be seen. Mark, in the past, we've seen yields drop as much as 6 bushels an acre or increase nearly 4 bushels an acre from what the government estimates in August. Now, that kind of a change from a 32 estimate in August, if we'd see that this year, would be the difference between $5.50 futures and $10 or $12 futures. So the key determinants are still ahead of us here, but if we are on the verge of a pattern change, then the highs perhaps are indeed in on the bean market. And yet we're in such a delicate balance, Mark, that just a 1 bushel per acre change in yield is worth 50 to 75 cents a bushel ultimately. So we're just going to be on needles and pins. Right now we're trying to basically discount a 38 bushel per acre yield compared to the 34 and 42 yields that we've had in the last 2 years. And that's a good place to be for the time being until we see how this weather plays out.
All right. From a sales standpoint, what would you tell a producer to do?
Well, you've really just got to come to in your own mind with the idea: is this thing going to return to normal weather or not? We're in a hair trigger situation, and most producers are probably going to dare it to rain and hang on and just see what happens.
All right. Let's talk about the corn market. And obviously, if you're watching the show, we have a lot of faithful viewers over in the state of Illinois where they've had the severe drought in many parts, Peoria and that whole region. And you're looking at this corn market and the action in there saying, gosh, we're down this week, and this is a substantial corn growing area that's having some real crop growing problems. Overall, with the carryout that we have, is it significant?
Well, that's right. We've got over a 2 billion bushel carry-in that's going to help buffer inventories this year. As this week went on, as the rains fell in key parts of the belt, with some declaring that the drought was coming to an end in parts of Wisconsin, Michigan, and Indiana, leaving really just eastern Iowa, southeastern Iowa, and key parts of Illinois dry. The industry is starting to coalesce around the idea, be it right or wrong, that the national yield could be between 132 and 138. A lot of people zeroing in on maybe 134, 135. Well, now, Mark, that's going to cut our ending inventory in half. That leaves us a carryout of 1.2, 1.3 billion next year. But the problem is that's not enough to be bullish at particularly the recent highs that we had at 275. We saw fund buying early in the week. They got long. The market collapsed. Now they're in trouble. We'll probably see more fund liquidation. Unless we start to move out of the range on the yield prospects that I just mentioned, I think the highs are in. And we'll really now just go into the tedium of fine-tuning these details. And ultimately we'll look back, and this will be the year that we cut our inventories in half, that inventories were drawn down, those buffer in the stocks disappeared, but the whole story, potentially very bullish story long term, will be transferred to 2006 and 7 with lower inventories there than 11 billion bushel demand base. You'll need huge crops and good weather next year, but that's really where the story is probably going to be transferred to, and this year will end up maybe in a 225, 250 range on futures, and perhaps the weather scare is to some degree behind us now as we're starting to stabilize some of these areas. And that'll be particularly true if, again, next week we see the rains and cooler temperatures that are forecast after the 100-degree heat this weekend.
All right, let's talk about the wheat market and the action there. And, of course, it softened up as well. I mean, the whole market is in a sell-off mood at this point. You mentioned the funds. What's your take now on wheat and the wheat market as we go forward?
Well, we have the wheat crop more or less made. We have record or near record spring wheat yields. We have certainly more than adequate winter wheat crop. U.S. stocks of wheat now are almost guaranteed to increase. The last USDA estimate had stocks building to the largest level in several years, and they're 700 million. I think the market clearly understands that world prospects are generally favorable. Australia turned out to be much better. Canada, although the European crop is down some, Black Sea, Eastern European wheat is discounted sharply. And so we have really a not very exciting situation in the world or U.S. wheat situation. Wheat's going to follow corn price action. Long-term wheat will lose to corn and try to price itself as a feed grain. So a lot less excitement there. The funds have been persistently short the wheat market while they've been long corn and beans with dramatically different underlying fundamentals. I think all we can say about wheat is it's going to follow the corn market, and if indeed the corn market has had its highs, the speculative highs are in, then we can look for wheat to drift lower. Some private analysts think we have as much as 30 or 40 cents down from here, and I wouldn't argue with that if we can calm down the row crop price action.
All righty. Let's go over and talk live.